What's up, guys? Welcome back to another video. In this video we're going to go over support and resistance, what support and resistance is. We're going to identify key levels and zones and how you can trade off of them, and we're going to talk about how you can implement support and resistance in your own day trading, because support and resistance is very important in day trading, and it should help you a lot, and it's something you should master in your day trading. So start off, what is support? So support is a specific level that price bounces off of. For example, right here, this is called a support level, also known as a demand level. It lets you know that there is a bunch of buyers at this specific level, because at one point in time sellers tried to push the price down and the buyers stood tall at this level and pushed the price back up. So the sellers or the buyers pushed the price back up, the sellers brought it down, the buyers held this area. We're like, nope, we brought it down here before, we're going to hold this level again. And then the sellers pushed it back down again, the buyers held this area and pushed up again. So once you see multiple touches, or once you see price coming down here and you see a confirmation that the price is going up, that's usually a good opportunity, and that's exactly what I did the other day. I journaled my trades here. I saw price was coming down to this demand support level, and I got in as soon as I saw this long wick. I got in somewhere around here, and I got out right there. Nice little couple tick trade. Now let's talk about resistance. So what is resistance? Resistance is a point in price action where the price cannot go above. It's a ceiling. So go back to support. This is the floor where the buyer's at, and now we're on resistance. This is the ceiling. This is where sellers are at, and this is also known as a supply level. And once there's too much supply of something, prices go down. So if we look here, it's a perfect example of resistance. Perfect example of support resistance in this day. So we see the price. We see the sellers coming down, the buyers push the price up, the seller's like, okay, we're going to hold this area. We don't want to go above this area. Sellers want to hold this area. So the sellers push down, the buyers push back up, the seller's like, okay, we're going to make this we're going to hold at this resistance level again. And then sellers push the price back down again, buyers push it up, and the sellers stood strong at this level again and push the price back down. So I actually made two trades here the other day on Tuesday. So once the price came up to this level, I saw it rejecting right here in a long red wick candle. I got in as soon as I saw that selling momentum, and I got out right about here. I could have waited and got down here, but I played it safe. That was about 50 bucks. And then I saw the price coming back up. Buyers took the price back up. The sellers again held this level, at this resistance level, and I got in as soon as I saw confirmation. I waited, saw the sellers pushing down even more. I got in right about here, and I got out right about here once I saw that slightly upward momentum. So that is support and resistance. Yeah, it's really important that you learn what support and resistance is. So if you look back at it again, let's look at another example. And the reason why I draw boxes is because for support and resistance zones, you don't want to have a specific level for your support or resistance. Like if I just put it right here, if I put this horizontal line here, and I just went off that, as you can see, the price went up, it went past that. So if you didn't have these boxes, you would just think, oh, okay, the buyers push back up that resistance level, and maybe we're going to get a bounce off that resistance level, a retest off that resistance level, and go back up. But because I have the box, you get a more in-depth view of those key zones and those levels, because in day trading, a support and resistance level isn't a specific number. You're not going to get it at 369.00. You're not going to get it at that. You're going to get it from, like this was mine. This was from 369.1 all the way to 3692. So you don't want to do horizontal lines for your support and resistance zones. You want to do boxes. And yeah, so that's pretty much what support and resistance is. And one thing I want to go over again, so if the price falls below a support level, let's say price fell below here, it falls below that support level, so the sellers are in momentum, right? They broke past that support level. Usually what happens is the buyers push it back up and the sellers reject at that level again. So what happens is that old support level becomes resistance. So if we had something like this, sellers pushed it back down, buyers tried to push it back up, but the sellers regain control of that area. So usually when the price goes below a support level, it becomes resistance. And if the price rises above, let's do another example. If the price rises above the resistance level, it usually becomes a support level. Where's some good examples? Right here, yeah. So the price rose above the support, or the resistance, sorry. And the sellers brought it back down, and the buyers used it as a support level. And that's exactly where I got in my another trade. I entered right here once I saw the momentum, and I exited right there. Beautiful. Probably about $150 trade. So if we go over that again, if the price falls below a support level, usually, I'm saying usually because it's not always, it becomes a resistance level. And if the price breaks above that resistance level, it usually has a support level. It usually transfers into a support level. So that's what support and resistance is. I hope you guys learned something today. Be sure to look out for my channel for future videos. Thanks so much for watching. Hope you learned something.